We have seen a bank which has just given 13 crores, 14 crores profit in the quarter of December. So many banks for that matter is finding it very stressful to bring the bottom line positive, or I would say to a commendable figure. So what happens is that between the operating profits and the bottom line, what is being carved out is nothing but the provisions. So the provisions are eating away the entire operating profits of the bank. So at this particular juncture, I would like to caution you that every provision which you are going to recommend at the branch level will be immediately asked, immediately questioned, or immediately they will be asking you questions about how you are able to make these provisions from the bank level as well as from the regulators level. Because it is got a materiality involved. We know that what is materiality? If a particular figure is able to vitiate the presentation or presented accounts, if you are having a loss of 2 crores, I would say that even 2.5 crores is a material amount, because the loss is going to be made profit by this particular 2.5 crores. Even for a bank with a capacity or with a turnover of 4,00,000 crores, I would say that even 2 crores or 1 crore will become very material, because of the fact that this 2 crores or 1 crores is going to vitiate the picture of the presented accounts. If it is going to be loss to profit or profit to loss because of this 2 crores, it also becomes very material. Again, we know that materiality is judged on the basis of the legality. If the provisions made are not properly made, and if it is legal strictures and the prudential norms are not followed, again it is going to be material. So in two ways, the bottom line is under stress because of the provisions, and we have to be very careful in making the provisions, quantification of the provisions. Although we say that system is giving you all the inputs and outputs in respect to the provisions as well as the asset classification, we have to be very careful in gauging whether the provisions are being done. We have found out lot of cases where system lacuna and the system data error or the integrity of the data is being questioned at the granular level as well as at the branch level as well as at the CBS level, which has totally distorted the figures. I will come to it later. Now coming to the United Bank issue. If you look at today practically, every person is looking at the auditors, every person is looking at the nationalized banks for the purpose of what is the news that it is going to bring in 31st March 2014. Because we have seen that from from a provision of 2,900 odd crores as on 31st March 2013, the non-performing assets of United Bank of India rose to 8,900 crores, which is close to 3 times the provision which has been declared 2 quarters before. That is, as on 31st March 2013, the NPAs, gross NPAs of United Bank was less than 3,000 crores, whereas it has closely touched 9,000 crores by December. There are a lot of things, deliberations going in the banking industry. I would say that it has shaken the banking industry. There is a big shake in the banking industry with respect to this particular revelation. So what we have to see at this point of time is that every society, every regulator, every banker is looking at with a very big eye and the eyebrows up to see what is the news that every bank is going to bring in 31st March 2014. So again, our task is becoming very, very important. And the Central Vigilance Commission has already started a mission on finding out the due diligence again by the top management, by the internal management, as well as by the branch auditors and the statutory auditors and the concurrent auditors in the United Bank case as to whether they have done according to the procedures and systems. Sometimes if at all they have done according to the procedures and systems, if they are not able to establish with the planning process and with the working papers and with the documentation that they have done due diligence, they will be failing in their duty and they will be stamped as persons who has not done their job properly. So documentation again becomes very important in the wake of the United Bank case. Now restructuring of loans, as has been pointed out by Murali sir, now the restructuring proposals are more in the banks rather than new proposals for loans. If you look at every one day or second day, restructuring proposals are mounting up in the banks. Let it be CDR restructuring or let it be non-CDR restructuring. So what is the domain of the audit of this year is that the restructuring process which has been undertaken by the branches And the restructuring procedures which has been given by the banks has to be very well and thoroughly verified by the senior chartered accountants who are going for the audit. I would appeal and I would submit that the restructured assets are going to create a lot of problems this year at the time of branch audit as well as at the time of central statutory audit of the bank. So the restructured assets is going to, it is mounted and it has contributed and it has reached up to a very alarming level. Even borrowers have started to resort to the restructuring to get the soaps and easing and benefits of the restructuring. And today, there are certain cases where the CDR restructuring cases, which has been sanctioned way back in 2 years or 3 years before, now they are saying that we are going to prepay because we don't want to be stamped as a restructured company where our credibility is affected. Which means that what was the prerogative and what was the legitimate reason for which you have gone for the CDR or the restructuring. It was not the cash flow issue, it was not the fund problem, it was not the liquidity, it was only to get the maximum benefits out of the restructuring. So there are two cases in this particular aspect we have to be very careful. One is that the restructuring, whether it is actually to be done for the purpose of restructuring. Restructuring has to be done in spirits, and there are a lot of strictures which has been coming in the Reserve Bank of India circular. I would say paragraph number 12 to paragraph number 15, around 12 pages, clearly specifies in the master circular of the Reserve Bank of India what are the ways and means in this restructuring has to be verified by the chartered accountant, implemented at the branch level and sanctioned at the CDR level as well as at the central statutory audit level. So I would appeal all the members to have a look at this particular 10 pages of the Reserve Bank of India master circular which has come on 1/7/2013 and the paragraph number 12 to 15 which is very relevant and important, and I would also appeal that the senior chartered accountants should bestow their personal interest in respect of verification of the restructured assets, and because it is going to be a very important aspect for the purpose of drawing the attention of the bank management or the central statutory auditors as well as of the regulators. Now coming to sale of NPAs. Sale of NPAs are happening. When you are not able to withstand the pressure of NPAs, the mounting pressure of NPAs, the ratio of NPAs goes up, immediately what you will do is that I don't want this particular asset, I am very much wary of this particular asset. I bundle all my NPAs and sell it to the asset reconstruction company. Maybe my asset worth is more than around 7,000 crores, I am even prepared to sell it for 3,000 crores to get rid of this particular menace of NPA. I have seen in a particular bank, I don't want to name the bank, wherein the auto rickshaw loans are given for more than 5,000 auto rickshaw loans. How will you be able to collect 5,000? A branch manager or a regional office will not be able to follow up all the 5,000% and that too auto rickshaw drivers on a daily basis to collect 100 rupees or 200 rupees of their daily wages for the purpose of giving this particular loan, and all the accounts are NPA. So what happens is that it is not practically possible for a banker sitting at the sitting at the branch of the nationalized bank. Will it be possible for him to make 5,000 phone calls a day? Humanly impossible. So bundle all these loans, give it to some asset reconstruction company. You take it. I don't want it. One-time loss. So this particular thing may not happen at the branch level, but even then, I would say that we will be able to contribute at the branch level if you find that these type of assets are accumulated in the same nature at the branch level, which are all minuscule loans. You can even suggest to the central statutory auditors or the branch management or the bank management for bundling it and selling it off so that you can get rid of the garbage. Now coming to the NFB exposure. We know that the banks usually sanction the non-fund based exposure as well as the fund based exposure. So non-fund based exposure is LC as well as bank guarantee. Fund based exposure is your term loan, overdraft, cash credit, etc., etc. So now what is happening is that because of the stress in the financial market, the fund based limits may be 100 crores to a particular borrower, and there will be non-fund based limits of 40 crores or 50 crores or even 150 crores. What will happen is that because of the stress, the LC is going to get devolved and the borrower is not able to meet the commitment of payment. So naturally your non-fund based exposure is going to become a fund based exposure, which is going to be a very important aspect in this particular financial year. If you find that earlier we were all having a soft stance on the off-balance sheet items, that is your LCDG, etc., except in the case of your capital adequacy certifications, you will not look at that particular side. But today, the off-balance sheet items like your bank guarantee, your letter of credit is going to come as a front runner in determining the existence of the branch itself, the profitability of the banks, because tomorrow this may be devolved and the borrower may not be able to meet the commitment in respect of the non-fund exposure, so it becomes a fund-based exposure. So you have to caution. We have to caution the risk involved in the non-fund based exposure of a weak borrower. A weak borrower, if he has got a non-fund based exposure in the form of LC or BG, we have to be very careful in cautioning the bank. Or we have to see whether pragmatically whether it is going to be turning out to be NPA today or tomorrow, or whether it is already NPA. I would say that we have seen cases where an LC is granted during the month of January and the account of cash credit account and the ATM loan account is totally defunct, only that oxygen is given for the purpose of keeping it as alive as a performing asset, and there is an alarming situation in April which is going to come where the non-fund based businesses are going to become maturing. The cash credit account is just operated to see that it is performing. The term loan accounts are fed to the extent to which it is not to be treated as NPA. So the critical amounts are paid, but at the same time there is an alarming non-fund based exposure which is waiting for me in the back door, which is going to be maturing in the first week of April or the second week of April. S4. Are we not concerned about the events occurring after the balance sheet date? So we should be able to caution the management, although it is not coming under our domain. I would say that it should be pointed out to the central statutory auditors, because by the time the audit is completed, this will become an NPA. So what is the stance we have to take in respect of this particular non-fund based exposure becoming a fund based exposure? System synchronization issues. Lot of issues are there. We cannot just take a shelter stating that computer takes care of everything. And if you look at the branch audit, as a branch auditor, if you go there, we have seen time and again the branch managers totally taking shelter and cursing the CBS, as the case may be, according to his convenience and whims and fancies. When you ask for a particular report, he will say that it is not possible because the core is not giving me. If you ask for a particular provision, he will say that it is core. If you ask for an interest application, he will say that it is core. And if you ask for something else, he will say that system is not supporting me. So system is blamed, and system is used, and system is abused for the purpose of taking shelter of their own weaknesses. The branch manager...
You may have real problems.
Yeah. So I don't want to name the banks here. So I should be very careful in making a presentation in an August audience like this. I cannot name any of the banks. We know which are all the banks in trouble in that particular case. United Bank issue is a national issue, sir. It is a national issue. It is a national issue which has already been published. So what I would say is that the system synchronization issue, the NPA, we say that way back in 39/2012, the Ministry of Finance has given a direction to the bankers stating that no, you cannot draw a non-NPA statement manually or from any other application software. You have to draw it directly from the system. So the system generated NPA statements are in vogue from 39/2012. But now again, Reserve Bank of India has come out again saying that it is not another application software which is going to be infused for the purpose of generating the system generated software. You have to cull out the information straight from the horse's mouth, that is a CBS database itself. Earlier what is being done is that the CBS database was lying here, an application software was there in between where all the data which is relevant for the purpose of preparation of the NPA statement is fed into the application software, and from there a generated statement was there that is called the NPA statement, which is given to the auditors for certification. Now that is not the case. You have a straight through process, STP. A straight through process is happening directly from the CBS database to the preparation of your NPA statement, with which any mistake or any disorder or any inconsistency, incapability or incompatibility of the basic data is going to have a direct impact on the NPAs and the certifications made by a chartered accountant. So we should be able to go by the logic. I would appeal that when we are going to do the system generated NPA certification, don't take total recourse to the system. Please go into the schematics. Please go into the data flow. Please go into the information flow into this particular system, whether there is a manual intervention in between to see that whether the particular data which is given or which is used for the purpose of preparation of your NPA statement is aberrated or the integrity of data is checked at the granular level. So again I am coming to tell you the master data are becoming very important, which I will come to in the next slide. So next is regarding the present issues. The core banking has got lot of advantages at the operational level, but at the same time we don't have any audit trails. Earlier we had the physical audit trail. Now we don't have an audit trail at all. Any number of corrections can be done, modification can be done. Anybody can do any correction sitting in any part of the country. On 31st March or pre-audit when we were going for a branch audit, we will identify certain accounts are being watchdog accounts and whether certain accounts are sensitive accounts where the recovery has to come before 31st March, otherwise it is going to become NPA. You will shortlist that account, you will discuss with the branch manager coming out, and when you go for the post-April audit, you find that the account is totally paid from where the credit has come. If you look at, it would have been come through another account where you will not be able to give a particular narration or a physical audit trail. You will not have a physical audit trail. No vouchers, no checks, nothing is there. But the credit has come through ECS or EFT or RTGS or something. How will you be able to understand whether it is a genuine credit? There are checks and balances. I tell you, there is a narration given in the entries. If it is RTGS, it has got a peculiar IFS code narration. If it is inter-soul accounts are there. In CBS, every branch is called a soul, S-O-L. So inter-souls are given a number, soul identity number. So if I am doing a particular bank and the credit is coming from the same bank from another soul, I will be able to make out from the basic code of the bank itself. 880 is for Canara Bank, so every bank has got a basic code which is embedded in the IFS code itself. So from this particular entry you will be able to find out whether it has come from another bank or whether it has come from the same bank. And we are only concerned with those credits which has come from the same bank. If another bank is going to give a loan for the purpose of circumventing or repayment of the NPA, and the borrower is taking another loan for the purpose of mitigating this particular loan, it is out of our ambit to see. At the same time, if the same bank, the different branch is going to give a loan to the same borrower to evergreen or to make another account out of NPA, then it becomes the domain of the chartered accountants to see whether the credit is a genuine credit or not. So we have to make a judgment in respect of those credits which has come. So that is what is the important aspect in respect of the lack of audit trails. Then centralization of the database. Every data is centralized. So if the CBS fails, everything fails. Although it has got its own advantages, it has got its own disadvantages also. I would say that as earlier in the manual environment or in the TBA environment, when you close the branch audit, when you finalize the branch audit, the AFI team or any person will not be able to come all the way to all the branches and verify whether the ledgers and the books of accounts are properly maintained or not, or whether there is any transaction deficiency in the account or not. But today, through the CBS, as has been again pointed out by our Narendra sir, there is a central repository of all the database even being drawn simultaneously by the Reserve Bank of India, with which a cash credit account lying in any of the corners of the village branch will be known to the Reserve Bank of India sitting in Mumbai or any part of the country, because the system enables him to get the details of the accounts sitting in any part of the country. So in the AFI also last time, what has been done is that the AFI people came and one of the techno-savvy young AFI person has gone into a CC account, a dormant CC account, or he has just punched into a branch and he has seen which are all the watch category accounts. Some 10 lakhs CC account he has seen. When he saw the 10 lakh CC account of that particular remote branch, 10 lakhs is a very, very small amount in respect of materiality when you look at from the bank as a whole. But even then, out of curiosity, out of his enthusiasm, he has done this particular exercise and he found that this account has been sanctioned and not operated for 2 years and it has not been classified as an NPA. So, it was overlooked by everybody. So when this particular database he is given to the senior AFI team, immediately he said that we will check all the watch category accounts sitting here, getting the database from here, and he got a connectivity to the CBS, and he went to all watch category accounts as on 31st December, as on 31st March, above a benchmark, and found out whether operations are there in the account. Only those accounts where no operations are there, they called the branch auditor and asked, how did you skip this particular account from your notice as to how it is not classified as NPA? Give me the explanation. What explanation we will be able to give at that point of time? So, the database, so the core is having its own importance in the way that the centralized database is going or throwing open the database to everybody from every corner of the country to look at any point of time and do the supervision. Now, verification of accuracy of records, shifting to integrity of data. As I told you earlier, the integrity of the data is very important. At the time when you are going to enter the data, we all have studied garbage in, garbage out. If the computer is not going to be given with the correct data at the desired point, at the correct level, we call it CIA, confidentiality, integrity and availability of the data. So the CIA is to be confirmed for the purpose of ensuring that the output which is generated from the system is correct or not. There are a lot of operations. I would say that you will not be able to totally depend on the system in respect of the outputs which is given by the system. Even the balance sheets, I tell you, I will come to a practical example later. So the balance sheets are also having its own problem. Now coming to the centralized application of interest and charges, a very important aspect. Whenever you are asking about interest rate, 80% of the revenue of the bank, it's coming, no? Is there? 80% of the revenue of the bank in terms of your deposit interest or your loan interest or processing charges, inspection charges, periodical charges, folio charges, all these things are system driven. So we don't have anything to do at the branch level. The moment a loan account is opened, the processing charges is debited. The moment the due date of renewal is happening, the processing charges is debited. On to 31st of March according to, or 31st of May or 31st of March at the month end, the core is running the program to put the interest at the branch level. But it has got its own lacunas, shortcomings, because the interface, when the core is having a master, the master is running with the application program and the product and interfacing with the granular data residing at the branch level, and the interest is applied to the various accounts. So when the core program is run on a batch level, what is happening is that the batch processing will interface with the master data at the branches and interest is applied to the various accounts. There are certain cases where if the data is not properly given in the master data, the core will not apply interest. We have found out so many cases where the core has slipped for accounting interest because interface issues are there. The best example is that every loan interest is linked to the base rate. So base rate plus 2%. So if the master is not fed in such a way that base rate plus 2%, or if it is totally given as 12% in the column, it will not account for the interest, or it will not debit interest because the interface issues there. Because base rate is controlled by the central CBS. Only this plus 2 is controlled by the master. But this base rate plus 2 is the requirement for the purpose of charging the interest. When it comes, the interface issue comes and there is an exceptional report. There is an exceptional report for everything in the banking industry. We know that bank audit is only a balance sheet audit because we are taking shelter and we know that the internal controls of the banks are so robust and the systems and the procedures of the banks are so robust and transparent that no weakness can come in respect to the preparation of the accounts. Only at the balance sheet level we have to make an audit. So coming to the next topic, it is accuracy leaving way to logic. It is not the accuracy, the output may be accurate. If 10 lakhs is a total loss assets, you will find that 10 lakhs is a provision to be made because 100% provision has to be made to the loss assets. And if the doubtful asset is category 1, it will say that 10 lakhs is the total amount of doubtful asset and it is in DA1 category attracting 25% provision for the secured portion and 100% provision for the unsecured portion. And if it is 10 lakhs and 5 lakhs is a secured amount and 5 lakhs is an unsecured amount, 100% of the unsecured amount is 5 lakhs and 25% of the secured amount is 1.25 lakhs and the total provision to be made is 6.25 lakhs. Everything is perfectly clear at the outset when you reach the output. But at the same time, when you ask me whether it is security valuation is being properly fed into the system. Whether this 5 lakhs is for a lorry which is purchased 5 years back at a cost of 5 lakhs, whether the depreciable value is being taken for the purpose of your asset classification and security as on 31st March is a matter of fact which is to be questioned in integrity of the data. Same is a case which a person will have 3 loans. One loan will be a housing loan with a balance of 50 lakhs and he would have pledged a house of around 3 crores of rupees. Another will be a car loan which will be a primary security against the car. Another will be a clean loan of 5 lakhs of rupees. Now, if you look at the NPS statement, you find that the housing loan is totally secured against 3 crores of rupees, and if this the overlapping of this particular security is not considered for the purpose of provisioning of the other loans, that is your car loan and your clean loan, it will become, both the other loans will become an unsecured exposure. The prudential norm says that you have to classify the NPA or the prudential norms are to be applied borrower-wise, not facility-wise, which means that if a particular okay. Yes, Chairman, you have to allot me all these times extra. He is cautioning me to slice it down, and the Chairman's job is to slice the things and make the entire meetings in order according to the time schedule. Anyway, what is happening is that in respect of the logic, I would say we will call it optimization of securities. The optimization of security, borrower-wise, is that he has got a total security of 3 crores. When he has got a total security of 3 crores, according to the general lien, you have got 3 crores plus the dependent value of the car as the total security, primary plus collateral, and he has got 3 facilities, and all the facilities together will be much less than the value of the house which is already secured to the bank, so it is a secured exposure. But if the linking and the optimization of the security is not happening properly at the branch level by the unique code, we call it the unique code which is to be given to the borrower. Many of the banks does not have this unique code system. If I as Mony is going to take a loan from X bank and I am going to take the same loan or another loan from another branch of the same bank with my details and with my cell phone number or with my other parameters, the CBS or the system should be able to link to say that this is the same person, so he has already been allocated a unique code, so my customer ID should be embedded with the unique code. Majority of the cases it is not there. So when unique code is missing, what will happen is that your optimization of the security will not happen. With that, your unsecured exposure and the secured exposure is going to be wrong. With that, your provisioning for the bad debts is going to be wrong. With that, your capital adequacy is going to be wrong. So the logic and the interface of the system and the database is very important rather than the accuracy. Accuracy may be perfectly, everything is okay. As I have told you earlier, if you look at the face of the statement, it will be perfectly alright. Then CBS facilitating round stripping. Round stripping is a case where the same transaction is done 5 times to see that my turnover in the account is increased 5 times. We have got a story in the old days that a parent has given a varagula to a son and a daughter, saying that you should sell it and you should not eat it and everybody should touch this particular plantain, only getting 10 paisa. So what will happen is that after running for a long period of time, they will not be able to sell the plantain. So one friend of the father comes and he says that this is a plight of us, without 10 paisa we will not be able to touch the plantain. So immediately he gives 10 paisa, purchases one plantain, eats it. After some time, the sister gets thirsty. She gives this 10 paisa to brother, and I have given you now 10 paisa, you give me this plantain. So like that they will change hands between them this 10 paisa. At the end of the day they will eat the entire plantain. That is called round stripping. I have got 5 rupees in hand, I put it in my CC account, withdraw it, put it in my SB account, withdraw it, again put it in my TD account, withdraw it, again put it in another bank account, withdraw it. So this 5 rupees becomes my turnover 5 times. If you go to the northeast, you find that there are a lot of subsidies given to the manufacturing sector. On the basis of the production which is happening in the manufacturing sector, subsidies are given by the government of India. So in order to overcome or in order to grab entire subsidies, some of the industries what they have resorted to is that the different processes, we have come across a peculiar case where the 5 processes in the steel industry from the ingot level to the final level is made as 5 factories. And these 5 factories are coming under 5 public limited companies. And these 5 public limited companies will show 5 turnovers. So every process is 1 turnover and 1 manufacturing. And for the same ingot manufactured from raw material to this, if 5 process is there, your manufacture is 5 times, I am getting 5 subsidies. Same way, from the banking angle, I am getting working capital finance for all the 5 public limited companies. And when you look at beyond the corporate wheel, lifting the corporate wheel, we find that the entire public limited companies are held by a group of people which are family held organizations. So going beyond this particular corporate wheel, we find that this is a group of round stripping which is happening around the corner. So what is happening is that in respect of round stripping, I can transfer some money from my account to your money on 31st March and get rid of the NPA. So if it is from the same group concerns, if it is different companies, of course we will not be able to at that point of time, at least we will be able to have a risk perception given to the management in respect of this particular round stripping aspect. Integrity of granular data, I have already told you, focus on financial audit turns to forensic and proprietary audit. It is not the financial audit that we are doing. When we speak about the integrity of the data, we are going into the deep roots of finding out whether there is any manual intervention in between. On the final day, on 25th of March, a particular loan account which is to be paid in 60 months is corrected in the master as to be payable in 120 months. What will happen to the NPA statement? It will not become an NPA because your payment schedule is totally changed. So your integrity of the data, whether anybody has tampered with the master in respect of the EMIs, the terms of payment. So your audit should not be totally focused and confined to the financial audit, but you have to see whether there is any manual intervention, manipulations. There is a report which is available from the system which speaks about the master data correction report. The terminologies of this particular report may change from bank to bank, but there is a report, both in Finacle as well as in FlexCube as well as in TCS banks. These are all the 3 major softwares running in the entire banking industry, majority, otherwise than in the case of our bank where the in-house software is there. Majority of the banks have got these 3 softwares. One is Finacle by the Infosys, then you have got the FlexCube by the Oracle, and you have got the TCS banks given by the TCS. So if you go through the schematics of the data flow of these particular softwares, if you are able to find out what are the lacunas in the software, that will be best for you. So exception reports are there everywhere. Now coming to same database used to be different investigators, I have already told you. Now system generated NPA statement. You should be given or you will be given or you may be dragged to the inference that system is giving you the NPA statement, so nothing is to be verified in the system generated NPA statement. I beg to differ from that. My dear colleagues, I would say that there are a lot of mistakes which has come in the system generated NPAs. I told you with respect to the optimization of securities, with respect to the security which is being grabbed by the system itself. Please take the NPA statement as on 31st December 2013. Please take the NPA statement as on 30th September 2013 and compare it with the 31st March 2013 NPA statement. You find that the security value as on 30th September will be 3 crores and as on 31st March it will be 50 crores. Because the data, whatever is culled out from the system may be wrong. So the entire provisioning is going to be wrong. So if you compare the 3 statements which is generated from the system itself, we have found out lot of inconsistencies. Maybe because it is a logical error or it is a system error or the manual intervention, whatever we call it, but it is a domain of the auditors to see whether the integrity of the figures and the certified figures are correct or not with respect to the provisions. So if you want to ensure that this particular thing is not being done, please take and compare the figures of the security value and the provision and the classification and the NPA date. Very important. You all know that there is a natural degeneration or degradation happening in the NPS. First year it is substandard, second year it is DA1, third year it is DA2, fourth year it is DA5, and then it has to give 100% provisions. So when it comes to a natural migration of NPS, we call it natural migration. Without doing anything, without any act or commissioning, it all naturally migrates into the next, slipping into the next level of NPA, which attracts more provisions. So the date of NPA, if it is changed, we have found that in more than around 700 cases, in one of the AFI reports of a very leading nationalized bank, I don't want to name the bank again, it has been commented that in 700 cases, the date of NPA is tampered, with which your migration, natural migration is not being depicted in the NPA statement. So these are all the main areas where I would request you to please focus on. Then your next topic is audit planning. As I told you, we should be able to have a perfect plan. A perfect plan and a documentation is only going to preserve the process of branch audit, point number 1. Only going to preserve the integrity of the profession at large, and this is only going to repose confidence in the minds of the society as well as the regulators that yes, we chartered accountants are doing a common service to the society and the financial spectrum of the country. So business mix of the branch. You should be able to understand when you go for the pre-audit session, you should be able to know what is the business mix of the branch. What is the constitution of the business? Whether it is advance oriented, or whether it is deposit oriented, or whether it is NRA deposit branch, or whether the charges given is more, or whether the off-balance sheet items are more, whether the export credit is more. All these things has to be understood. We should be able to know the business mix of the branch so that we will be able to plan the audit and plan the checks and balances and program the audit according to the business mix of the branch. So business mix is nothing but you should be able to know what are the areas of the businesses which is basically predominantly done by the branch. In a rural branch, it will have only SB account and FD account. And in the case of an extension counter, it is only fixed deposit and fixed deposit loans, nothing more than that. So you should be able to know again the profit of the bank. What is the profit of the branch? What is the total depreciation which is charged by the branch? In a nutshell, study the financial